And let's get down to grassroots trading here. We love talking to Gemma Dale from nabtrade. 1 o'clock on a Friday. Gemma, we've had so many moving parts today. I had a bit of a chuckle at some of the little observations going on here. One thing I have to jump on, no interest in Crown. A retail sector just had enough of that story.
Yeah, it's so fascinating. I had a look at the numbers over this week, and obviously you would have expected a bit of interest from our guys yesterday, right? Generally, they love a bargain. They love anything that's giving them an opportunity to either sell at a high or anything that's been hit quite hard. And the reason I was looking for Crown particularly was when I first started looking at numbers, when I first took this role, and it became apparent our guys love something that's been hit hard. It was almost immediately after Crown had started making headlines for anti-money laundering and other very unsavory practices. And at that point in time, it was mostly media reports. There was no particular intent for the regulator to go after them. There was no suspicion that we would end up with a royal commission that would have been as damning as the one that happened, right? A lot of people thought that would never happen. So the stock was off 10%, whenever it was. And our guys were all over it. They were buying it like crazy. They loved Crown back then. Yesterday, not a trickle of dollars into it. There was just no interest whatsoever. So it's fascinating to me. There are stocks and there are sectors that people will just not touch. Once they've been burnt a few times, they're like, you know what, I don't need this. And Crown is that one at the moment.
That's fascinating, because the first observation you made from a big picture perspective is there's a lot of trading activity. Normally people are at the beach or running after the kids. So what are they doing trading in the first week or so of January?
Yeah, it's really interesting. The volumes are really, really high. And we look at the volumes not just sort of at an aggregate level, but also we've had such an extraordinary influx of new investors and new traders over the last 2 years. You can't get carried away and assume when you've had a doubling of total people trading that you will always get a doubling of trading volumes. But it is quite astonishing how high the volumes are at the moment. We would have expected, particularly new investors, that this would be a quiet time for them. They don't, there's no real need for them to keep trading quite actively with the market where it is. It's been trading sideways for a while. And a lot of them learned very early to buy the dip, and those dips are not as exciting as they were when they first came to market. So we expected things to quieten down, but it's still happening. Our biggest traders are still doing what our biggest traders do. So they're trading Fortescue. The iron ore price continues to amaze people, holding around the $120 mark, right? And as you said, there are broker reports going, do you know what, now might be the time to take your money and run. And yet we've got very active trading happening in Fortescue regularly, very, very large volumes, very, very large average trade sizes, with investors and traders who follow this super closely and will move daily. There's a sort of general trend of trimming, partly because there was so much buying around the sort of $14 mark for Fortescue. When you're at $21 something, it's money for damn, right? You've done incredibly well in a very short period of time. So there's a general trimming trend, but it's pretty active trading. So they're still looking for small opportunities on a daily basis. BHP is a bit similar, because we saw a ton of buying around the $35, $36 mark. At $46, you've done very well. It's a nice opportunity to jump out. So we're seeing a bit of trimming. And Pilbara Minerals was just astonishing last year. And it was one of the rare material stocks that actually caught a lot of attention, even though it's sort of outside those top three that get most of the attention. We saw a ton of buying in it, but pretty consistently through the year. People were doing really well. They didn't take profits mostly last year. They just kind of ran all the way through with it. This latest pop, we've seen a bit of trimming. We've seen people go, oh, wow, that's been amazing. I might just lock in some of that. And then the other one is Core Lithium. This is new. This is quite a momentum trade. It's obviously a tenth the size of Pilbara Minerals, entirely different part of the market for our investors who would tend to stick to the top end and something more proven. But we've seen quite a bit of momentum trading in that, and people wanting to get on board that one as well.
Well, it sounds like in terms of, it sounds like a lot of the big household names that you've been covering. So far, you haven't mentioned any banks. They are looking, just looking at my screen here, goodness me, they're down at least 1%, CBA down 1.5%, Westpac down 1.3%. Is this the time to start nibbling at the banks? If people like nibbling at the miners, are they equally disposed towards the banks?
The banks are interesting. They were obviously enormous 10 years ago and 5 years ago with retail investors who had grown up with the theory that you buy banks and then just sit on them forever and enjoy your yield. And frankly, you will do well in the long run. There was a long-term drift down. CBA obviously bucked that trend, but the other three you could have bought and still be well and truly underwater during various periods over the last decade. So for many of our investors, they're much less convinced about the long-term merits of banks than they may have been some years ago. And it's a more mature part of the base who have a commitment to the financial sector. They know it well, they've invested in it for some time. So we've seen a real drifting down in commitment to financials. Their overall proportion of portfolios is much smaller than it was. About 35% a few years ago. It's now down sort of in the 25-ish% range. Part of that is the fall in overall value for three of the top four. They will buy them on weakness. There was incredibly aggressive buying in banks during the COVID period. So when they got hit super hard in March 2020, there was just so much enthusiasm for banks, just so much buying. It was so aggressive. Most people have done extremely well and are happy to keep holding them. We do see consistent buying in Westpac. That's the one that is interesting, and it's very high value buying. So it's a small group of high value investors who want to pick up Westpac. Westpac had an annual report that was really disappointing, or an annual result that was really disappointing. And it seemed to stray away from the others, particularly ANZ and NAB, which surprised people relatively well. They were holding up. Westpac was the big disappointment. And then CBA had a disappointing quarterly. Those two were the ones that people bought. They only got an opportunity to pick up CBA at like $90, which is not that fantastic given that it started the year at $70. So for a lot of our guys, that's not enough of a bargain for them. So they'll take Westpac at $21 and they keep buying it. The other one is Magellan. I find this super interesting because you had Pendle up on the screen earlier. Funds management's a really difficult industry. It has been disrupted very heavily over the last 10 to 15 years by ETFs and the rise of online trading and many other things. And we have seen big fund managers, Platinum's the most obvious example, really suffer as a result of those trends. They rode high for a long time and then it's been a long downward trend. Magellan has been hit incredibly hard over the last, really over 12 months, over 60% off. And yet our guys are picking it up at this price, and they have been for a couple of months now. So it is interesting that a few of our investors do feel there may be some opportunity there and they do have the potential to come back. So I hope for their sake they're correct.
Yeah, well, maybe they think all the bad news is in the price. Who's to say? But yeah, it certainly has been on the nose. Absolute comprehensive around the grounds as always, Gemma. Look forward to seeing you next time. In the meantime, enjoy your weekend.
Nice to speak to you.